Hey guys, it's Will here. Thought I would discuss some things. So you probably know that yesterday we had a big drop in the markets, and that kind of messed up some of the charts in terms of the technicals. And as you know, I look at uptrends and moving averages like the 8 EMA, stuff like that. So it's going to kind of depend on how tight you want to have your how close you want to track things in terms of if you get out when they break through the 8 EMA, or if you look at the overall uptrend. Because sometimes, like in the NASDAQ here, we have a straight line for the trend, but then we sort of pull away from it. So, or you could use the 50 down here, the 50-day moving average, right? So, we crossed it here, and then we've been kind of above it. And now it started to go a little bit, what I call parabolic. So we'll have to see over time. But from the general strategy that I use is to use this 8 EMA as a guideline. Another thing you can look at if you want to get early, potentially early exits is looking at the candlesticks. So this is a hanging man pattern. So you can see that it gapped way up here, it pushed all the way down, and then it got pushed all the way back. So when you see this push all the way back up, you end up with this wick down here. That means that it closed up here, but the low was down here. So that some people can think of this as a good thing, like you came down and you pushed all the way back up. But that's kind of like the last gasp effort of the bulls to kind of try to hang on. And that kind of potentially exhausts them out. So this hanging man is a warning sign. The other thing is stochastics. If you're up close to 100, you're in sort of an overbought area. But the definite clue the next day was when it gaps down and then it starts trading lower. So you can do things like get out, maybe sell half a position when you see this sort of scenario. But so you're starting to see gap ups, which is starting to show exuberance, and you're in a highly overbought area. So like when you have somewhat of a normal incline and then it starts to go a bit more vertical, be careful. And you can see with volatility stops that they start to get up high off of the 8 EMA. So here they're kind of below or at the 8 EMA, and then they start to move up. So if you did have stops, you could put them closer to the price. And so you don't even have to use these green dots, but you can, if you see it gap up like this scenario, you could put a stop at the close of the previous day. So you're getting up high off the 8 EMA. So it's kind of like a warning sign that you might want to be watching. But if you didn't do that and you saw a gap down in the morning and then it starts to go down, you could potentially sell. If you want to wait ultimately for the day's close and you see it close below, then you could sell here. But obviously that's a lot lower. And today, this morning, as of 8 a.m., you can see it's down another 1.1%. So if you've typically traded, a lot of times you'll hang on and it'll keep going down, and you'll just keep hoping. Like in the crash, as it went down. Obviously, if you're a buy and hold, you're not trading like I'm sort of been talking about on this channel. But once you see that break of so I'm just gonna move back to March, zoom in a bit. So sometimes you do get a close below, but it's up to you. It's a pretty flat T line, but even if you get out and then you start to see it come back, you can get back in. So with trades being like free or a few bucks a trade, even if you end up losing a bit, it's just a safety mechanism. So if you decided to get out here and then back in again, there's a bit of a purchase at a higher price or a bit of a loss or whatever, but you're saving yourself from this scenario where you're holding. So, if you saw a close here, the next day it could have been going up again, but now you see this big gap down. That's definitely a time to get out. The other thing that happens is you see this close up here and you think, oh, maybe we're coming back, but then it keeps going down. So then you had a lower high. So this is a high here, and then you have another high here with the down trend. But the other thing you can do is if you look at this 3 EMA, which is the green line, it's a tighter fitting curve, shorter duration in terms of 3 days instead of 8. This hasn't crossed back up over the 8 EMA, it's still below. So you haven't gotten back above. So here right after the 23rd, the 3 starts to go above the 8 again. So that's more of a confirmation. And then this higher low would be a better confirmation that you have an uptrend again. So there are some points when the prices close below the 8 EMA. So, it doesn't mean that you're necessarily on a downtrend, but like here, we had this close. You could got out, you could wait till it gets back in again. You might get, you might exit here and then get back in. So there are a few times when you have to quickly reverse yourself. But anyways, so personally, I wouldn't be getting into the NASDAQ at this point. I want to see, a resumption of the uptrend and above this 8 EMA and stuff like that. But, there could be scenarios where it just comes down to, so you want to see some sort of support. Like here you had close to this 34. This is a 34 exponential. I don't use it as much, but you want to see where it's going to support and come back again. So it could be a quick turnaround or more, there could be more downturn, but you don't necessarily want to wait and watch it. So you could be, if you're either in cash or in other things that are doing better at this point. If we look at the S&P, similar scenario, we're down and we're in a down candle today, this morning, as of the pre-market. And so I'd like to see an up, basically back above this 8 EMA. So we're not sure right now what's going to happen in terms of bouncing down, going down to 34.50, quickly reversing, or what's going to happen. The Dow, right now it shows a 0.38. This is pre-market, so you don't put too much focus on that. But we had a few bounces off the 50 here, and you can see we've gone up quite a bit from the 50, so we're not sure. And then we have this Russell 2000. And, obviously this one hasn't gone up as much as the NASDAQ, so it's not potentially going to go down as much. But you can see here we bounced off the 50 and we've been supported basically at the 50. So we'll see what happens here. But none of these look that great in terms of the overall index. So then if we look at stocks that I've talked about before, let's look at NAT. Obviously, this is in a bad situation. So we had a bit of a break of this downtrend, but it didn't last. There's other indications. MACD is declining here, which shows a loss of momentum. So even if you have a break here, it's not the first. Like I said, when you want to confirm an uptrend, it's not really anywhere near that. So I'd probably move my line now that we failed. And now we have a really bad vertical downtrend here. So Shell is another one I talked about. I didn't do videos on this for a little while, but I had this line here. I had a lower support where it was kind of opening or closing at that support, which is good. You can even see this candle came down and bounced back up off of this 8 EMA, which is really nice. You often see a candle supported at the 8 EMA, either with the candle close or the wick. So I have a line going across here where it wasn't able to get above for a few days. So if I didn't have a position, I'd be waiting to see. And then once I broke out here, I would get in. And then you see this pullback now. So the interesting thing is yesterday, it came right down to the 8 EMA again. So we still have support here, but because it's in a down, we gap down here and then we gap down again. I wouldn't be buying this if I don't have a position. So I'm just going to kind of wait and see what happens. there could be, if things resume, there could be a good opportunity. Like if you draw a trend line here and there's some sort of support somewhere, it might be, a good position here. But right now with this gap down in this one, I probably wouldn't be purchasing it. One thing you can do with stocks that kind of are new and sort of are going up quite a bit is use a shorter time frame, like 4 hours or 1 hour. So a 4 hour sort of fits really nice. You see how it keeps pulling back to it, even though there's wicks that come down below. If you waited till the close, you'd still be in it. And now you've broken down as of this morning. But you have to wait to see what happens during the open market. But if you go to a shorter duration, you can get in like a shorter trade. So this is about, a 1 day situation where you would get in here. This was, this is an overnight trade, but you're looking at about 3 p.m. on Tuesday. And then once it closes down below. So you can use the same sort of moving averages on different durations. But this one is obviously a new stock and it has a lot of excitement around it. So I think right now I'd be in sort of a wait and see. Even the sectors, like there was gold, GDX, these gold miners. It's in a bit of a wedge here. Like you see this descending trend, but also an up. So it's kind of squeezing into a point and then it could go up or down. But nothing really is happening. Silver isn't great either. Kind of a similar situation. I can draw, a bit of a down here. There was a bit of a higher high here, but, and then we draw this here. So it's in a bit of a wedge as well. There's value stocks. They're not looking too bad, or small cap, I mean, in terms of the chart. But with that big down candle, so we've had a big return, but we're still in the pre-market right now, so you can't take that for 100% gospel. And so it looked like what's potentially happening is some of the beat up sectors are doing better. Financial, the banks haven't been doing as great, but that's still a decent, it's still above. It didn't really get much below the 8 EMA here, and it's still in that uptrend. So, but we're closer to 200 MA, which a lot of times this thing kind of just bounces in there and it doesn't break out right away. So, but things like banks, energy is not quite obviously doing well. But the other thing I wanted to mention was the VIX. And interestingly, it's been going up since the 31st, or actually before that, the 27th of August 27th, we started seeing this up curve. So even like yesterday, obviously the VIX went up huge, 13%. But there was quite a bit of warning here that things were getting more volatile. So the VIX is the Volatility Index, and this was a sign that something was happening. The other thing I noticed was the US dollar, this was on the 1st, started to go up. I mean, it's had little things, so it wasn't anything huge, but we did get up. There's a bit of a thing here, but the VIX was one that the VIX short term was basically sort of telegraphing. I mean, obviously there's been the other, remember June 8th around there was a big, a bit of a dump at that point. So this was a bit of a clue. You might want to keep an eye on the VIX. So when you have elevated volatility, you're going to see bigger drops and gains. So I think, obviously in March when we had this crash, the volatility went crazy. So there was like multi-$1,000 ups and downs every day. So, all right, I hope that gives you some guidance there. Personally, in terms of the index, they're not looking great. I want to see a recovery, but there is some sectors that are still hanging in there a bit. But we shall see what happens. Talk to you guys later.